Now, I said at the top of the show, it's possibly the worst time, I was being a little bit facetious, right, to issue a short Bitcoin ETF because we've already fallen so far. Of course, the price could drop another 100% from here. What do you think, though, about what we've seen in crypto over the last few weeks? I mean, these catastrophes of Terra and now Celsius, Three Arrows, I mean, everything's pointing down.
We were really pleased, of course, to be able to launch BITI this week, BITI, which is short Bitcoin and through the futures market. And that, of course, follows on our extremely successful, in fact, perhaps the most successful ETF launch in history with BITO, long using futures for exposure. Now, I specify the futures because they stand in sharp contrast to, I don't know if chaos is too extreme a word, but as the tide has gone out, we've seen challenges in a lot of the ways people have been getting Bitcoin exposure. You know, even the largest exchange in the U.S. in their 10Q said, hey, client accounts might not be segregated in a bankruptcy. Meanwhile, as you look at the futures market, it's getting more efficient and more mature. So the long futures index is right on spot this year. The roll costs have come way in. It's a great indication of the strength and maturity of that way to get exposure. And we're pleased to offer both the long and the short side.
I don't think chaos is too strong a word, right?
No.
We saw a Bitcoin ETF that
Carnage.
had half of its assets under management
51%.
suddenly evaporate.
That was big. That was big. But I have sort of a technical question. So it's an inverse Bitcoin ETF. What happens if Bitcoin goes up 200%, for example? I mean,
right.
I assume this fund can't go down 200%.
Right. Well, you can't. So among the important advantages is that, number one, you can't lose more money than you invest. Number two, it's 95 basis points. And even if you could short, which is super cumbersome, the borrow costs are anywhere from 5 to 20%. So it's very efficient. And number three, really importantly, rebalanced every day. So every day it's rebalanced to that -1 times the futures index. And that's important too, because otherwise you kind of wake up and what am I today? You wouldn't know. So all those things are important in putting together the efficacy of the product and its attractiveness as a solution, on top of the fact that you're in that futures market with the clearinghouse, counterparty risk managed, and of course a 1940s Act ETF wrapper.